below 50,000.
Hello everyone, welcome back to the channel. I'm thrilled to have you here for another exciting episode of live automated trading. Today I'm eager to dive into the progress report of our trading algorithm, which has been running since October 1st of last year. We'll take a closer look at all the trades it executed and the impressive returns we have generated in just 4 months. Trust me, the numbers will blow you away. Additionally, I have implemented some significant changes to how the algorithm executes trades. I'll walk you through these adjustments, including insights into the number of contracts and stop for each entry. As part of my commitment to empowering you with knowledge, I've been sharing a basic strategy with my followers, aiming to inspire you guys to develop your own successful trading algorithms. I hope this ongoing series continues to motivate you on your journey to financial success. Without further ado, let's dive straight into the details. There's a lot to cover, but I'll get right to the point. Let's get into it. Alright, and that last trade was looking so promising and ended up with a stop loss, and the market just tanked. Look at this. That's when the inflation report came out. Market was disappointed and it just took a dive here, but that's good. The algorithm just exit out, and we lost here some money. I think we'll check in a minute. Otherwise the numbers would have been much better for the month. But anyway, this is the 4th month I've been trading this. We're using this algorithm since October 1st. And I started this series of videos showing you the progress. I started with a basic algorithm, and I'll describe in a minute. I received so many questions about this algorithm. I'll describe in a minute how it works and all the details. And what I've been trying to do is try to distribute, guys, give you all my followers a basic trading algorithm, just a basic strategy, right? With 2 exponential moving average, so you can start trading and designing your own algorithm. My goal here is to inspire you to design your own based on your own trading style. But if you want to, feel free to just start using what I'm doing, and I'll help you answer any questions you may have. All right, so let's get the result for the 4th month of trading. Starting in October 1st, and let's get the results out of the way, and then we'll dive into the details. All right, let me generate from October 1st to today. Let's generate this. All right, so let's take a look at the performance. All right, in terms of performance, we started here back in first trade was actually October 2nd. We started in October 1st, but the first trade was actually triggered on October 2nd. There it is. And then slowly the equity was starting to build. Here we have some loss here. We reached as high as $4,200 in January 19, and then we took some losses here, went down to 118.27, and then back up. And yesterday we lost some money here. So right now we are at 27.62. Let's see exactly. All right, let's see exactly how much money I made. All right, total net profit is 27.62, 175. From long trades 26.58 and short 104. Gross profit 12,489, and the gross loss 9,727. So that's what meant that creates a net of 27.62. So let's do a quick calculation here. I started this trading algorithm. I started with $4,000, right? And if you let me see, 27.62 75 divided by 4,000. All right, so we're at 69% total return. This is net total return. So we made 69% of the initial investment in just 4 months and 10 days. Here and the trade analysis. So total number of trades, we made 95 trades, 54 winners and 41 losers. That makes the average trade net profit $29.08. So $29.08 per trade. That's the net. 231, 29 on the winners and 237 on the losers. But we made more winners than losers, so that's why the net is 29 per average per trade. And you can see all the details here, and the trade. Here are the actual trades, right? Till the last one, we were doing pretty good until yesterday. We lost 637. That cost, but it was a stop loss. It could have been much worse. The algorithm. Let me describe the algorithm again for those followers just joining us on this series. But anyway, if you guys are interested in me doing a video from scratch on how to build just a strategy, just a simple strategy, let me know and I'll put together a video on how to do it from scratch. This strategy is becoming a little bit more complex. So what I do here is I trade. This is TradeStation, and I trade the micro S&P. So this is the smallest contract you can trade on the S&P. Each contract has a marginal maintenance, so you need to maintain in your account at least $1,298, and that could change, but that's the minimum you need is $1,200, $298 per contract. So when I started with 4,000, so I was able to trade, I believe, 3 overnight. So that if you want to keep this algorithm keeps the trades overnight, right? It exits out when it needs to trigger an exit. So you need to have enough to cover those maintenance calls. So for instance, I have 4,000 initially, and each contract cost me $1,298 minimum maintenance. So I was only able to keep 3 contracts, and actually I started trading with 2. And as I kept building and building, then I increased to 3, and then I kept building, and now we're up to we were up to 6 yesterday, and now I'm back at 5. But anyway, you get the concept. The more I keep accumulating, the more contracts I keep investing. So that's one of the changes that I wanted to show you in this update. What I did is let me describe the algorithm first. So we use micro S&P. I already said that. The time frame is 4 minutes. You go here to time frame, 4 minutes, and then you go customize. And I'm using 10 years back on this workstation. On my other workstation, the testing one, I use 20 years for just testing, making sure the algorithm is sounded and it works well. And it is really, let's see if I can show you a 10-year view performance here. Let's run a 10-year back testing, right? So you can see on a 10-year with $4,000, if you were to start, you will get to 74,000, which is pretty good performance. Let's do periodical returns here, and this is how much money you will have made on each year, just keeping the same amount of contracts. Now, what I do is I keep increasing the contracts, so these numbers are gonna be much bigger, right, at the end. But if you were to keep constant and investing the same amount of money and withdrawing, you will have made this amount on each year. All right, that's in terms of performance. Look at the amazing performance, right? The equity. This is the equity curve. This is probably what 4,000. Yeah, trade. This is 4,176 trades in 10 years. This algorithm made with a total net profit of 75. There it is, $75,000.52. All right, this algorithm uses the micro S&P 4 minutes, and you see the coloring here. I want to deep dive into the coloring here. Let's see if I can show you here. Give me 1 second. There it is. I'm gonna zoom this. All right, you see this red and green lines, right? These candlesticks. All right, if you click on here, let me see if I can click. There it is. So what I'm using is I'm using a indicator that is called price less than the average. So if you go here, studies, edit studies, I'm using this price less than average. So what it does is, if the price is below the average price of the last 14, that's the length 14, then it's a red. If it's above the average, then it's a green. So that kind of gives me a trend of how well the price is moving. Now, in terms of moving average, I have 4 moving averages, right? So I have the blue ones and the red ones. The blue ones, they are these two. They trigger the long trades, right? So it's the fast moving average is 74 days, 74 periods. Actually, not days, periods, right? Because we are 4 minutes each, and slow is 294. That's what I found based on my testing. That is the most efficient for this micro contract, not another contract, just this contract. If you were to apply this algorithm to another contract, you need to adapt the moving averages. For the slow moving average, I use those for the short trades, right? The short trades, I use 175 for the fast and 75.50 for the slow. And the idea is when the blue lines cross over, when the fast one moves over, like here. Let's see here. When it moves over the slow one, then it triggers a long position. And when the red line, the fast red line, let's see if I can see one. When the fast red line crosses over the slow red line, then it triggers a short. Now, there are other variables that I take into account. That's why you don't see a short here. It wasn't the market conditions were not properly set up for that, so it didn't. Now in this case, you see here, let's zoom this in. This is a perfect trade. All right, so the blue line cross over the fast or blue line, the thin one, cross over the slow one, and I use another indicator to confirm that, and it triggered a long position here, right? So let me explain this indicator here, what it means. But that's the basic idea. When it crosses over, you triggers a long position, and then you ride that and you start hitting different targets. So the other indicator that this algorithm uses is this rate of change. This rate of change keeps measuring the slope of the moving average. So it keeps measuring the slope of the moving average, how fast the moving average increases. And I only trigger a long when it goes above a certain threshold, right? For this case, for this type of contract, I'm using 0.075, 0.0759. When it goes above, that means that it's highly probable the market will not keep going up. So what I do is it crosses the blue line, one confirmation, and then it's above the rate of change, yes, then it triggers a long. That's what happened there. Now, when you have only 1 or 2 contracts, there's not much wiggle room and there's not much you can do, right? You just buy and then you sell high. But when you start having multiple contracts, and that's the idea that I want to implement, or that I implement in this latest version, is I sell with targets in mind, right? And let's review the targets prices here. So when I trigger long here, right, the first target was hit here, sell partial, and then the second target was hit here, and then here. So I just refreshed to my latest version. It was actually the one I was showing you was my previous one. So this is actually the latest one, and you see I changed the naming of the target. So now you can see clearly. So let's review this one of the examples, so you'll see in a minute. All right. So here let's see here. It triggered a long, right? So the first long here, recent long that we have, was triggered when the rate of change went above the 0.07, and the blue line, the fast moving average, crossed over the slow moving average, like here. So it triggered a long. Now, it seemed like the market went down, but the stop loss is below this line, so it never triggered the exit, right? So the trade was we were still in the trade, And now let's see the targets that I set up, and I'll show you how many contracts and where are these targets. So first target was hit here, then market kept going up, second target was hit here, and third target was hit here. Now fourth target was here, right here before the market collapsed. So that was really lucky. We hit it right there. Now what happens is I have stop losses on each of the market entries. So for instance, when you get long, let's take a look at the stop loss parameters. So let me share this quickly. You do edit, so you go right click on the actual strategy, edit strategy, customize, and then you see here the parameters. So the percent loss long is 0.45. If the price fluctuates more than 0.45%, so 0.45%, just that, I'm out of the trade. So in this case, it went up. I mean, it triggered a long, and then the price went down, but it never hit 45% down loss, right? So it never triggered a stop. Otherwise, it was close, but it never. So we kept being on that trade. Let's see. Now first target, let's review the targets here, what each target is, edit, customize. Let's review the target. So our targets right now is, my first goal is to get to 0.35% of the price. The second one is 0.75%. The next one, third one is 1.25, and the last one, which is sometimes not attainable, but it's 1.75. That's just a long in case the market keeps going up and it takes a couple of days or more than a couple of days, and we're just making money. Now every time the a target gets hit, the stop loss gets increased, right? So, and it gets increased by target. So let's take a look at how much I increase one by one. So the first time the first target is triggered as 0.35, then the stop loss gets moved from below, so from negative 0.45 to actual 0. So worst case, if one target gets hit, we're out at 0. The remaining contracts, we're out at 0 So now if the second target increase, we increase the stop at 0.35. So we make money even if we hit two targets. We make money even if the third target is never hit and it goes down. We're out at 0.35% of the price movement. So, and the third one is even higher, so 0.77. So we make money as long as you hit one target, you're gonna make money. You need to hit one target that you make that much money on that contract. Then the stop goes from negative 0.45 to 0, right there. And if the price goes down, then it triggers a stop. So you make money just on the first target alone, right? And it continues, right? The more targets you hit, the higher the stop loss gets increased. So you make more money even if the market drops. All of a sudden, it turns negative. Let's do edit strategy. And let me show you how many contracts. So I'm doing 5 contracts. I'm back to 5 contracts. In the first target, first batch is just 1. Second batch is another contract. Third batch is 2, and then the fourth batch is 1. So total of 5 contracts. That means that on our first target, we purchase 5 here, right? 5, and then we sell 1. Second one, we sell another 1. And then 2 on the third one, and then on the last one we sell the remaining 1. But as you start making money and you get more contracts, you're risking more money, more contracts, you keep increasing this. So all you do is you said 6. All right, now I'm gonna sell 2 instead of 1 on my second batch, or you can do 1 here, and I'm gonna just make even more money. I'm gonna sell 2 in the latest batch, but this is the probability is less, right? That I'm gonna increase so high. The probability of hitting the first batch, which is the first target, is so much bigger, right? Because it's just an increase of 0.35%. But on the longest goal, which is 1.75, less probable, right, to happen, but more money you're gonna make, right, obviously. So you can play with the trade size. All right, that's about it about the changes for the latest version of the algorithm. It is performing really well. I'm really happy with the results. As I said yesterday, it decided to, right after the fourth target was hit, the algorithm took another shot at a long. Let's see here. As soon as the last target we made, let's see how much money I made on that one. Let's review exactly how much money we made on that one, and then we'll review what happened there. We'll go to trade list here in a second. Let's go to yesterday. Let's see what happened. All right, so first target made with just one contract, right, at 0.35. We made $93, $93.75. Second target was hit with one contract, 190, so it keeps increasing, right? And that's a 0.70% of the price. Then third target is two contracts. Look at this, two contracts, $635 in just the third target. And the fourth target, that's just a gift, 438. That doesn't happen all the time, but it could happen. 435. So that was the fifth contract, and it was a real. Let's see how much money was that on that trade. Just one trade with 5 contracts. Let's do 93 quickly. Just 93 plus 190 plus 635 plus 438. So just one trade with 5 targets made us 1356 approximately, right? Because there are some cents here, plus the commission, right? The commission is it depends on the when you sign up with TradeStation. But I think it's right now here it's $1.25. Anyway, that's how much one trade made us. And then the market, and then the algorithm actually took another long, because it was the rate of change was above the threshold I established. So it took another long, right? Because still the fast moving average was above the slow moving average, the blue line. So it took another long, and then market decided the CPI report, the inflation report came out, and the market decided to just went down all of a sudden, and we exit out here at, like I said, this is at 0.45%. But it's good because look at this, it kept going so much. So better to get stop out without protecting your capital all the time. Look at this massive drop on the S&P on the market. About it for this update. I hope you guys enjoyed this series. Let me know, give me some feedback if you want to keep I'm gonna keep giving you updates in terms of this algorithm, how well it does throughout the year. I'm gonna at least give you an update once a month. I'm really happy with the algorithm. Like I said, we've made around 67% return in just 4 months. It's really nice return, and the capital is pretty much protected because we have these stop losses all the time. But I'm using the TradeStation desktop application, so something to consider. You guys may use web-based or some other application, but I'm really happy with TradeStation running on my desktop. Anyway, if you want, I can do a video about having step by step how to create a basic strategy from scratch. If you want that, let me know. If not, if you have any questions, also let me know, and I'm happy to help you. Thank you so much for watching, and I'll see you in the next one.